Okay, can you hear me, Lorena? Okay. Good morning.
Hi, Kari. Good morning.
Hi, good morning.
Hello. How are you?
I'm good. Thank you. How are you?
Very good. Are you in the comfort of your home?
I am.
Very good. We're all at
Yeah.
home.
Yeah, that's right.
Okay. So, Kari,
Yes.
thanks for taking a time to check on what we have. This is a great opportunity.
No, thank you for inviting me.
Okay. Okay. So, currently you work from home, right? You have you're self-employed.
I do.
Okay, that is really good, right? So the business opportunity we are in the financial industry. And by the way, just a little bit of background about myself. So I came to the US back on 2005. My first job actually was became a real estate agent when we moved to Texas in 2007. So, and 3 years after that, I jumped into the financial industry because I saw a great opportunity and specific to life insurance and annuities. So and then I used to work for a company representing Transamerica, Nationwide, Pacific Life, all those huge companies.
Okay.
Yes, and then recently, about a year and a few months ago, somebody introduced me to this company. It's called Premier Financial Alliance. It's the brokerage. It started about 1989. Okay, but the company
Okay.
we represent is National Life Group. And National Life Group, we are the flagship broker for National Life Group. And that insurance company actually started back on 1848. So it's 172 years old company.
Wow.
Okay.
Okay.
It's a high rating, A plus all the way. And it is mutually owned. So which means it's not publicly traded, which is good because, the company cannot just change whatever they want to change, okay, for profitability
Okay.
company. Yeah, because it's mutually owned. Now, what's great about our company, Kari, is that our company actually created the living benefits of a life insurance plan. Now, let me tell you about the general information about insurance, okay. And by the way, are you somehow familiar with insurance?
I am with so I went a while back to get my license to sell life insurance. I
Oh, really?
uh,
When was it?
It was just about, I guess this happened about 6 months ago. And then I was going to join a company. So I studied for my test. They only gave us 7 days. So I literally like crammed everything like almost day of or whatever because I had to go buy a laptop and do all that stuff.
Did you
And
did
so
you take
anyway,
the exam?
no, so I didn't because I did not because I went to go to the testing center. And when I went there, well, number one, the people that were with the company, his girlfriend was the manager, which it was all done remote. So she was in Houston. She was not the nicest person. She was really annoying and like micromanage people. I don't like that. So, but
Okay.
anyways, that's besides the point. So I went to go take my test and I put in the address and apparently they had moved, like Person Vu had moved their location. And so I
Oh,
went
you
I
missed
went
your
to the
exam.
wrong I did. And so they wanted me number one. So I was going to go back and retest. And I reached out to them to let them know, and they never replied. So I was like, well, forget it. I'm just not even going to do it. Because I just thought that was so unprofessional.
Oh,
But I have studied for it. I mean, again, I crammed everything within a 7 day span, and really, I literally did it within 72 hours.
so did you
But
study the life and health?
I didn't do the health, but I did the life. But
The
I
life.
know
Okay,
a
that's
lot
good.
about. I know I've worked in the medical field for the past 14 years, so I
Okay.
know a lot about health insurance,
Okay. Okay.
how it works and whatnot.
Okay.
I have
Okay.
a curve, so to speak, I guess.
That is really good to know. Yeah. The great thing about our company is that with National Life, because of the products we have, they don't really actually require us to get to be health licensed. So life only is very easy. Okay.
Okay.
Life license only. Okay, so that's good. Okay, let me tell you about the insurance industry in general. So in the life insurance industry in the US, 70% of people carry, they own life insurance policies already. But the
Okay.
thing is, 98% of them, they have to die to make use of their life insurance plan. And that's the
Okay.
basic, right, Kari?
Okay.
That's what most people have. Okay, so now let me tell you, National Life Group in 2007 created the living benefits of a life insurance plan, making life insurance now accessible even when they're alive. So what that means is that when they get sick, when they get sick with critical illness, let's say cancer, heart attack, stroke, major organ transplant, in-stage renal failure, and so on, there's a lot on the list. And let's say disability, now their life insurance plan will pay them a lump sum already. So that's how great that is. Now, and because of that, so I'll tell you, the 70% is our primary market. Now, did you get that? Did you get it, Kari?
I did. I heard you. I'm just making notes.
Yes. So the 70% is our primary market. When all other insurance companies, they're fighting for the 30% who actually don't own insurance. Now, their job is to actually they educate them that life insurance is good, that you need to get one, you need to protect your family. But that market is our secondary market. Why are they not able to go back to the 70? Because basically they're selling the same type of life insurance, right?
Right.
But for us, we help them upgrade their plan. We change their plan, replace their plan to a better plan that gives them the peace of mind. So how are we able to do that? I'll show you, okay? I'll show you. And by the way, if you ask me what type of plans do you have, all types of life insurance we have it, and it all comes standard with all those living benefits coverage. And I'll show you the living benefits for now, okay? This is our company, okay? And this is Life's Puzzle right here. It says
Okay.
people could die too soon, could become ill, live too long, right? The
Right.
most of the policies that people own actually only takes care of dying too soon or maybe dying later, right? Because it's
Right.
mostly for death only. But the flagship product, I would say the flagship product we have actually takes care of all these things. Okay. So I would mention, I would show that to you later. It's a permanent life insurance plan, but it's the Index Universal Life Plan. Okay. And
Okay.
here are, when I mentioned to you about the living benefits, okay, let me tell you what those are here. So number one is, okay, I'll make it big, critical illness and critical injury. Okay. So when you look at critical illness, Kari, can you see this, Kari?
I can see it.
You can see it. Okay.
ALS, Lou Gehrig's,
Yes, this is where,
aorta,
that's right. This is where cancer, heart attack, stroke
cystic
is part
fibrosis,
of
heart
this.
attack.
Yeah. This is
Right.
and also end stage renal failure. All this I mentioned to you specifically, these are actually the number one cause of death or sickness in the United States. Every 30 to
Yes.
40 seconds, yes, ma'am, someone is diagnosed with that, okay, in the US. So that's why the need for a protection with the living benefits is very, very important. Now, let me tell you on the next one. So here, how this works, Kari, when the insured, okay, when the insured suffers from one of these, and depending on the severity of the sickness, that's how much the insurance company will offer. Okay, how do they determine that? Is based on what they check on the hospital or the doctor. The doctor says it. Okay, so now here is, I'll show you. Okay, and by the way, I mentioned to you that, so based on the severity of the sickness, so it could be a minor, moderate, severe, or life-threatening event. Okay. So for the case of life-threatening, it's easily 70% of the coverage. That's the lump sum that they're going to give easily. Okay. So
Okay.
then that's critical illness, and same with the critical injury. Okay. What's great about it, Kari, is that here the living benefits could be used for any of this, or whatever that is. It doesn't require a professional medical care to be able to avail of that one. Once they're certified and insurance company give that, it's their money. They can decide what they're gonna do with their money. Okay. Okay. Now, the next one is chronic illness. Now, Kari, chronic illness, Kari, is actually disability. Okay, this works as a disability. When 2 out of 6, it says right here, when a doctor certified within the past 12 months that you are unable to perform 2 out of 6 activities of daily living. What are those? These are the activities of daily living. Okay, for a period of at least 90 consecutive days without assistance, or that you are cognitively impaired. Yes.
I would assume that that falls under like MS, multiple, like, what, Lyme disease, things like that, along those natures.
This is how they're gonna check. When 2 out of this they're sick, and 2 out of this they cannot do.
Okay, I see.
They will
2
be
out of the
certified.
6.
How are they going to receive this? This is monthly. I'll show you later, okay, how it's being done. Okay, that is monthly. And then the last one right here is terminal illness. Now, all life insurance policies Kari comes with a terminal illness benefit. Actually, it doesn't matter where you get it from whether what company you get it from. It comes standard with that. But let me tell you this. Most of the companies out there, they will only give that. You know terminal illness, Kari, right? When doctor says you have this much life
Right.
to live, that's terminal
And you have this
illness.
amount of time to live. Right.
Yes, that's right. Now, most companies out there, they will only give this benefit when the life left is at least 12 months or less. That's most companies. And it's mostly just 60% or 70% of 80% of the coverage. But look at National Life. National Life, if someone has been diagnosed with terminal illness that will result in death within 24 months or less, okay, and certified by the physician, then National Life will give that already. And how much is that? That's 90% of the coverage. That's how great that is.
Okay.
All right. All right. So those are the living benefits coverages. Okay. I'll close this one and I'll open a new slide. I'll jump from place to place and just to show you, the highlights. Okay.
Okay.
Remember, I mentioned to you all types of policies we have come standard with all those living benefits that I just showed you, right?
Right.
But let me show you this specific plan, because most people that we introduce this plan with chose to get this one instead of just getting a term insurance, which will expire later, and they lost all the money. Okay. Now here, let me tell you, the problem though, Kari, with this one is there is no growth, right? No growth of your money. Nothing. Now, yet you have safety, accessibility of your money. You could put 100 now, you could take it out tomorrow, but there's no growth. Now, the other place where most people put their money is here, okay? They avail of what? 401k, 403b,
Right, I see.
funds, right? You see this?
I do.
But guess what, Kari? Did most people lose money back in 2000 and 2008? You know, right?
Did they lose money?
A lot of people lost money back in 2000 and 2008. Why? Because it's so high risk. The market crashed. Okay, the market crashed. They lost their money is gone. Their retirement is gone. Right now now look at this. This could give us a rate of return between 5 to 10%, but we're looking at 20 years and 30 years of putting our money in there, right?
Okay.
But the thing is market is so crazy where you just do not know it will crash again. And it happened every 5 to 8 years. So when that happens and the person is retiring in 2 years, in 3 years, or a year from that time, then he could probably end up having only, one half of his money that's left in the 401k. Right? So this is very scary, okay? Very uncertain. Now look at this. The other place has this best feature actually with safety, guarantee, accessibility, and this one has the 5 to 10%. But you know what? Because of these two things right here, no growth and very high risk, the insurance industry created what? A great alternative. It's the Index Universal Life Plan. Okay. your money will grow tax deferred. And with National Life, if you fund your policy well, grow money inside your plan, and when all is well, no sickness at all, as early as age 60, okay, for somebody who started growing money in this type of plan, they
I
could
see.
turn their, as early as age 60, Kari, when all is well, they can turn their life insurance plan into a tax-free lifetime income. How great is that?
That's great.
That's great, right? That's great. Now look at this. How it works is this. It's, by the term itself, index, universal life index, it's mirrored. The growth is mirrored on the performance of the index. Now we know that the index could go up, could go down. But what's great about the index strategy, okay, is this. Every time the market goes up, you will grow up to a cap. There's a cap. We're given a cap. In this place, in this case, 12%. But the best thing, Kari, is this. Every time the market crashed, go negative, you don't go with the negative. You just go level. You just keep whatever money you have. And at that time, when everybody else lost their money, you just go zero. No growth at all. Okay? Is that great strategy?
That's awesome. Yep.
That's awesome. It gives us, Kari, the peace of mind, right? You can sleep well. Okay, so here, let me show you this. Two graphs, the orange and the blue. The orange actually indicates the performance of the market. This is how somebody else 401k works, 403b, mutual funds, right? The orange line. Now the blue line, this is the index universal life plan, okay? And as you could see, going back to the orange line, this is an example from year 97 to 2011, where this person has 100,000. It went up, Kari, okay? It went up. Look, but on year 2000, 2001, 2002, it crashed. It went down below the 100,000 even. And this is after 6 years of putting the money in there, right? That's how crazy that is. All right. Then it went up again. It crashed again. It went up. At the end of the 14-year period, he has created less than 140,000. Okay. Now, you can follow Kari. Now look at the blue line, Kari. The blue line is the IUL, okay, with living benefits. Now we know for the fact that because this is a permanent life insurance or a life insurance in general, you know, when a person is approved, let's say this is a 500,000, it is an instant estate right away for that person, for the family, right?
Right.
Because at any time, that's right, Kari, because at any time accident happen, he gets sick, he will have the money, right? So, and that's what great about this. Look at this. It went up, it goes up, okay? Not that much, not like the orange line, but the moment the orange line crashed, okay? The money that was created in the Index Universal Life Plan, it just went level. So he kept the money. And it went up again. So that's the power of the index strategy. And look at this. At the end of the same period, Kari, he has created almost 200,000. Is that a great strategy?
That's awesome. Okay.
That's awesome, right? And that's what we have. And I mentioned to you, the next slides, these are the three major risks in our lives, okay? And you know what, Kari? One or two of these for sure will happen to anybody. We just don't know which one. Right? But of course, dying, of course, is for sure, right? But look at this. Our plan, the Index Universal Life Plan we have that has the living benefits, that has the feature that could grow them money. And when all is well, they can live too long and they don't worry about retirement. Why? Because they can turn this plan into a tax-free lifetime income. It will take care of all this life puzzle, okay?
Okay.
All right. So statistics I mentioned to you a while ago, every 30 to 40 seconds, you know, people in the US suffers from one or, you know, two of these ones. Okay. Now here, okay. I will not go into this comparison between 401k and this one, but I'll show you.
I'm listening. I'm just going to try to download this on my computer so I can get a bigger screen.
Okay. Kari. Yeah.
Yes.
Please just don't record this one right here.
Okay.
Yeah, okay, just for compliance, okay?
Okay.
Yeah, for compliance purpose. Lorena can share to you, um, when you meet and review it again. But look at this, by the way, let me share you this. These are actual claims, Kari, okay?
Okay, I see. Yeah.
Look at this. This person, I met this person personally. I know them already, okay? Okay, he was 57 years old when he got, he was 57-year old when he got the IUL plan. He got a 500,000 policy. He was actually paying for $700 a month on his policy. Okay, it's huge, right?
Okay.
But he can afford. But look at this. Only after 10 months of having the policy in force, he was diagnosed with kidney cancer. Okay.
Okay.
And he had a very successful surgery. And after 3 years, he's been cancer-free. At age 61, he reapplied and he was actually approved now for a new policy, which is a 1 million coverage. And look at how much National Life offered him after 10 months of paying, 288,000.
Okay.
Because of that severity of that sickness that he has, which is a kidney cancer. Okay, so is it good?
Okay. Yep.
Very
I
good.
follow.
Right? Okay.
Right.
Here. And we have a lot more of this one, and all because National Life is the company who started this, who introduced the living benefits in the industry. Okay, and they're really good. Since then, they're really good at providing for living and death benefits or whatever benefit to their clients. Okay, they're really good at that. So track record, we have that. Okay, so now I'll skip on these things for now. Okay. We will talk about more details of these things later when you decide to join. But look at this. Okay. We want for you to help us also to be part of what we're doing. This is a crusade for us, Kari, to actually help every individual out there. Remember again, 70% of people, they own life insurance. But guess what? When they lost a job, they go home, their life insurance is useless, right? They lost an income, it cannot help them. Why? Because they have to die so that they can benefit from it. And not them, it will go to the beneficiary, right?
Right.
And look at this. This is our crusade to provide them that, hey, there is something like this. You have to know this. And you know what? What we do is to help them upgrade their plan. And let me tell you, did I mention to you 70%, right? This is 7 out of 10 people owns a life insurance policy already and or contribute to their IRA or 401, right? Yes.
Right.
98% of them do not have living benefits. So let me tell you, this is what we do. We help them upgrade their existing life insurance plans to add all these living benefits at literally no cost. Why is that no cost? It's because Kari with National Life Group, what is important is you just have to be approved of the life insurance plan. And when you're approved, all these living benefits coverages is already included. Okay. And there's no monthly cost to add all those riders in your plan. Okay. So, because Kari, let me tell you, some other companies, of course, started to follow, to compete. They also introduced that, right? To compete with National Life. But we have so far the superior living benefits coverage in all of the industry. Okay, since
can I ask a real quick question?
Yes.
Do you guys see a lot of policies get denied because the patient or the client's gotten a genetic test done or things along those lines?
Oh, what's genetic test, by the way?
They are, so a genetic test is basically, our gene pool. And a lot of doctors' offices nowadays are doing genetic testing on people to see if they've passed, certain things down to their children and so on. Same with themselves. It's giving them their gene profile of their body.
Okay. Our company do not do genetic test. Yeah.
No, so, I know. Yeah. I understand that. But what I'm asking is, so doctors' offices that do genetic testing, right? And so how does your company pull for records? Okay.
Let me tell you this. Okay. So with our company, by default, there is no blood work. Okay. So they'll base that on the record. They'll base everything on the record. So
Here's my
Yeah.
concern though. These are not based off of your blood. These are based off of their doctors doing,
Yeah.
they're pulling genetics on the
It's okay.
patients.
Don't worry about it. I haven't had since I've written personal policies for maybe 150 policies already since I joined.
Okay.
I have not in a single concern about genetic thing.
Okay.
Nothing. Okay. So, and then let me tell you, Kari, with our company, very easy underwriting. They're pull it out from the MIB, Medical Information Bureau, the records, right?
Right.
That's
I
why
know
they
the
have,
law that they're not supposed to be able to like utilize anything against someone and whatnot,
yeah,
right?
they just have to sign on the what is this form? Yeah, to sign that form. And then the process is so fast, Kari. You know, I have a lot of policies submitted today, and tomorrow it's approved and issued the following day. That's how fast National Life Group is doing their work. Okay. Okay. And it's really great for us as agents, so that when they take out the first premium, they'll process the commission. We get paid right away, that within that first week.
Okay, I see.
That good? Okay. All right.
Yep.
So,
all right.
Here. Let's say, for example, Prospect pays New York Life policy for $250. New York Life has a whole life. Okay, whole life is expensive. And so this is for an example of a 500,000 coverage, Kari. Okay. Now, how do we do that, Kari? Is we could help this same person upgrade that whole life plan to an IUL with living benefits for the same $250 a month for the same 500,000 coverage. So now we're basically not letting them buy a new one and spend additional money, but actually just letting them utilize what they have, right? And give them a lot more benefits. And
kind of just bridging them together, I suppose. Right? Where you're just going to bridge it together from what they've had to the next one.
So what the process is this, Kari, it's actually a replacement, okay? So
I see.
It's a replacement. It is allowed in the insurance industry for as long as the replacement is justified. And yes, it is justified because from a policy that doesn't have any living benefits to a one that will give them the living benefits and have them having a life insurance that they don't have to die.
Right. Okay.
They will surely approve it, right? Okay. Yeah. Okay. Good. Very good. So here, let me tell you this. How many times we get paid? Okay. 8 different ways we get paid. And I'll just show you just the number one for now, the very basic. But all these things right here happened. Number one reason is all because of the generosity of our broker, the CEO of our company. Okay. He gives back almost 20% of his commission, Kari.
Okay.
Just to give us this additional 4 different types of compensation back to the agents. And that's how great that is. Okay. Now for personal production, let me tell you this. For personal production, and by the way, Kari, we are not a traditional brokerage. Okay. We are a brokerage that will actually allow you to start a business at a very small cost. Okay. And allows you to become an agent. And not only that, allows you actually to build your own agency. Okay. And that's the reason why we recruit, why we hire new people, why we help people there get through the process to get their license. And then we can train them and help them, learn and be able to do it themselves also. Okay.
Okay.
Right. That's the beauty of what we have. So basically, we can do this all over United States. Me personally, I think I'm already licensed in 13 to 16 states right now. Okay, so here, let me tell you, personal production. I'll start with personal production, just this, okay? Here. So with our company, the way it's set up, this is the business platform we have. It starts at 30, it goes to 45, 55, 60, 70. These are contracts. Now 30 is the entry. Yeah, it's small, right? But it goes up right here to 70. This is the first level of a director's level, 70%. Now here, Kari, with our company, our platform, actually, our CEO gives every new agent a chance to go to to become 45% or 55% right away. We call it a fast track, okay? So let's assume that you do the fast track. It has to happen 30 days after you join, 30 days from when you join, okay? It's a training sales actually. Now let's make it shortcut. You did the fast track and now your contract is 55%. That's what most people actually do. They want to be 55% right away. Now, on average, Kari, people who bought the IUL with living benefits with National Life, it averaged $250 a month, okay? I would say that personally with my policies, yes, this is true. I have people paying for $700 plus, almost $800 every month on their IUL. Some 500, 300, 200, and some also for the kids, of course, $29, $31, but the average is $250. Now let's take a used $250. Now, when that person applied for this for this policy, $250 a month, and the policy is approved, let's say 2 days after, and it's issued, and they take out the first premium on the third day, okay? Then the company will process it. Then actually, they will multiply it by 12 to get our commission, okay? Multiply it by 12, so it's 3,000. 250 times 12 is 3,000. And then they will multiply it by our contract, and that's how we get paid a commission. Okay, so they pay us in advance, good for 1 year. Okay.
Okay.
That's how we get paid. So look at this. If you're at 55%, and by the way, you're a certified field trainer already. Okay, so that's another certification that's required by our company, so that you could do it by yourself and you can close it. And
but I haven't gotten my certificate yet.
It's okay. No, it's okay.
Okay.
It's in the company. Okay, it's in the company.
Okay.
It's internal. It's a company business plan. Okay. They just want to make sure that the person really knows what he or she is doing before going out. Yeah. And
sure.
Yeah. So here.
I mean, yeah, you're messing with someone's livelihood at that point. You know. I mean.
That's right. Yeah,
reality.
You don't want to mess with someone's life also, because
I mean, that's what the information that you're pulling across to them is something that they're relying on, basically, and how they're going to live their life. Right, I get it.
That is correct. Yeah. So look at this, Kari. $1,650 a single policy that's paying for $250 a month. Okay. Do you know that? Let's take for example a nurse. A nurse is paid, let's say, $50 an hour. For that nurse to get an extra $1,650 in a month, that nurse has to work for another 33 hours just to get that extra. That's too much, right?
Right.
But look at this. With how we get this, average only 1 to 2 hours, and we're paid that. Okay. Of course, it depends on the policy. If kids' policy will be small, but this is averaging, okay? Some also big. But look at this. As your contract goes higher, and we will talk about details on this one once you join with us, so that you'll understand it's already the system and the compensation. We have the details. But this is the basic, okay? So and this contract goes up to 83%, okay? And every time it goes up, there's a difference. So which means that as you build your team, let's say, for example, you're now at 55 and you have somebody and license, and that somebody is 45%. So that somebody goes out, be paid 45%. Now National Life will pay you the difference as your override. Okay, that's overriding. Okay.
Okay.
That's how great. And when you become at least a QFD, this level right here, everybody in your team, it doesn't matter if that person is the same contract as you, a 70, you will be forever be paid an override, because that's a generation override. Okay.
Okay.
Okay, that's good. Okay, now here, let me tell you, we could make this much. We could easily, actually, if we just do it, be a 6-figure income just for personal production only, not including all those other compensations. If we just do this, remember again, we're using 250 and the average times 12 is 3,000. If your contract is 55%, be paid if you have one client, right? 1,650. Now, Kari, let me ask you, do you think the husband will also open one? And the
I mean, honestly, I think that people's whole family should, because I was telling Lorena, I don't know if people really take a lot of these things into consideration, but we have basically what's going on is an opioid epidemic, and it is really
That's right.
true, and it is happening.
It's
And
so scary.
their children are dying at younger ages.
Mhm.
Unfortunately, it's the truth. And
That's right.
addiction happens at some of the most crazy occurrences, from people breaking a leg to getting addicted to then it leading to something else that gets them out
Mhm.
on the streets to shooting heroin. I hate to say it in those ways, but I recently lost a friend
I'm
that
sorry to hear
she
that.
was 30, she was 35 years old, and she
Oh
left
my
behind her
goodness.
daughter to her 72-year-old parents.
That's so sad.
So, a lot of people are then left raising children with
Mhm.
no money, basically, for that child. And, people may want to say, well, then I'll just live forever after that. Well, that's not reality. That's the bottom
That's not.
line. And then the other part of that is that, you are near death yourself, and that child will either end up in the system if it doesn't have money for someone to be able to take care of them.
Mhm.
And so people really have to think about a lot of the things that are happening out here in the US that are really going on, and that are kind of taking this world by storm. Because I worked in pain management for 5 years almost, or 4 years, I guess. And I absolutely loved it, but it broke my heart to see what
To
happened to
see
the
these
patient.
people. Yeah.
Yeah.
Oh my gosh, that's right. So yeah, really, really everybody has to have. And what's great about us is because, as I mentioned, again, most people actually have policies already. And when and with the opportunity we have, when we, introduce them living benefits, they would really easily upgrade all their plans to include their kids.
Right. And
It's
they should. I think people don't really take into affect why those things are just really important. I'm not, honestly, I'll be honest, I do hormones. I'm not a big believer in health insurance, but I tell everybody needs health insurance.
That's
Everybody
right.
does. But
That's
to use it for catastrophic purposes.
Mm-hmm.
And if we were not, every time you get sick and get the flu, running your insurance card through everything and just sometimes paying things out of pocket,
That's
same
right.
with life insurance, would be better, versus, because then it will eventually make that industry kind of crumble a little bit, which it does need to a little bit, come to its knees. But I'm still a big believer, but I'm a much more big believer in life insurance than I am the health insurance part, because of what is truly happening out there, just to the younger generation in itself.
Mm-hmm. And what's great about what we're doing and what we have, Kari, is that, because you see, you've noticed a lot of people don't want to talk. They will run away. Actually, it's ironic because statistics show 70% of people, they own life insurance policies, right?
Right.
It's ironic that, most people that you will talk to, if they hear you talk about life insurance, they'll run away from you. Basically, they don't want to talk about it, right? But what's great about us is that these people, that the market that we have, the primary market that we have, these are all the believers already. These are people that owns already, and we don't have to convince them about life insurance is good because they already own one. We just have to share them that, hey, you don't have to die to make use of that, right? And that's the power of what we have. So here, plus the spouse, it's 1,650. Okay, so that's a total of income of 3,300. Okay, it could be 2,000, it could also be 5,000, depending on how much how much policies they would get.
Right, they want to cover on each person.
Yeah.
Okay.
Yeah, person to person. But look at this. What if you could just help, just very, very part-time, just one couple a month? That's 3,300. Even if it means 1,000, it will help a lot, right? For a lot of bills extra.
Right.
What if your clients have a lot more? Then it will be a lot more. That's just one couple doing this one part-time, just sharing it. You know what? Do you have an insurance policy? Yes, we do. Have you heard of living benefits? Oh, we don't know that. Is your insurance, will your insurance pay you a lump sum just in the event, you get sick with heart attack, cancer, or stroke? Would say, no, we don't have, there's nothing like that. No, we do have that. And let me share. Okay. And that's what we do. And look at this. What if, you could help one couple a week, right? A week. That's
Right.
one couple. It could mean 13,200. It could mean 10,000, 8,000. Multiply it by 12. In the first year, you could have 100,000 income, right?
Okay.
It's all, there's nothing easy. We have to do the work. We have to work for everything, right? So, but then if we could do that, you know, it's very doable. Let me tell you the person who brought me to the business. Her name is Margie Franco. She actually lives in Austin, okay? When she
Okay.
decides to do this business, Kari, because we were both experienced back in the other company, okay? We were both experienced and we are both directors back then. Now she joined first, and actually Kari, when she decided to really do the business, what she did is she built his big agency, her big agency. He recruited a lot of people from anywhere, from people who are leaders of network marketing companies, from brokerage like that. And guess what, Kari? In the last 3 months, starting 3 months ago, her income doesn't go down below $30,000 a month. That's how great the opportunity is. And you know what? 90% of that is not personal production. 90% of that actually is generation override. From his team, right? You know the concept of a brokerage, right? That's how it works.
Right.
That's how it works. And that is the opportunity that we have. Okay. So here, now, and then I'll tell you this, we have a certified field training program. Okay, so when you do the fast track, you do the training sales, and then maybe after that, you said, hey, Harney, I'm not still comfortable doing this myself. So
right.
You just go with me. I'll set up the appointments, go with me. Whenever we go out, there's 2 agents. By standard, by law, we have to be split, right? Split, share, right? So, but then when the time comes, you say, Harney, I think I can do that myself already, and I want to become a certified field trainer. Okay, there's a big difference between you having the confidence of doing that because you said you already learned the basic and even more than that, and you're confident, right?
Right.
But you can do that just yourself without being a certified field trainer. But becoming a certified field trainer, these are the benefits. Look at this. You'd have to do no cold calling, no door knocking, no networking, no mass mailings, no social media marketing. Why? Because our company itself, Kari, will send us solid leads, okay? These are people from different cities and different states recruiting new people in your area. So let's say you live there in the South Austin, right?
Right.
And when they recruit new people, and these people will introduce the living benefits, national life, and you know the opportunity we have, and they sign up to join, right? So what happens is that that person who recruited a person here, he doesn't have to spend money and time to come to train his person. All he has to look at in PFA is find the certified field trainers. And guess what? When he sees you, we'll contact you and say, hey, Kari, I know I saw you are a certified field trainer and you're great at what you're doing. I have a new recruit there very close to your area. And if I could ask for you to train my person, okay? Is good? In the process, there is a requirement again. Remember the training sales. Half of that will be commissionable to you.
Right.
And half of that will be commissionable to the person.
To the other person,
who refer you that person. Is that good?
Right.
Very good.
Yeah.
And that's, so you could choose to be a certified field trainer. We have a requirement for that one, but you will learn about it. Okay. So you have a lot of options here. Okay. Now, are you familiar with the IUL, Kari?
No. But
No?
you can,
Let me show you IUL. Okay. Let me show you IUL and how great this plan is. Okay, let me share you this. So this is the flagship. We have a lot of products, okay? Definitely when somebody said, hey, I'm a really a firm believer of whole life and I don't want anything else except for whole life. Okay, then let me help you upgrade your whole life to a whole life with living benefits. Okay, we can, yeah. but let me show you this. I'll run one illustration, okay? One
Okay.
illustration for, I'll use an age, average age. I'll use a 40. So the product, we call it, it's called a Living Life by Design. So basically, we are the only in the industry that has this, Kari, okay? Our CEO is a visionary. He's always advanced 10 years, okay? So look at this. So you can dial basically, okay, to customize whatever purpose the client wants. We could just dial it whatever he wants, but I'll use the basic death protection, okay? Then let me use a client, let's say a female, okay? Let's say, for example, a 40-year-old female, okay? And generally healthy. I'll choose preferred non-tobacco, okay? And then I'll pick, you follow me, Kari, right?
I'm following. Yeah.
Yeah. And then MEC avoidance. MEC actually is a modified endowment contract. Remember, again, the basic of life insurance, a permanent life.
Right.
It could be tax-free forever for as long as it's, the person didn't go over the limit of how much he can put inside the plan. Okay, so that's
Okay.
So we avoid that. So I'll click on this one. Okay, you will learn all these things as we go through the training. So
Okay.
and then I'll choose right here just easily, let's say 300,000 of coverage. Okay, and then this one right here, a gap protection. We are the only one in the industry that has this. Okay, and it's only available on National Life Group through Premier Financial Alliance. Why is that? Because Premier Financial Alliance, we are the company who actually created this and incorporated on the IUL with National Life. So this
Okay.
is proprietary to us. Okay.
Okay.
This one. We'll talk about more on this one. Okay. It's really good. Now, I'll put the death benefit increasing. Now here, I will solve this now for now, it based on a target premium, which is the target premium that's required. Okay, now let's take a look at the result. So on this person's age, a 300,000 is the requirement is $248.25. Okay.
Okay.
For this. Now remember again, this is not a term life. That's solely for life, for death benefit, or for protection only. This is
Okay.
a life insurance, a permanent life, a cash value. It will build cash, right?
Right.
Right. It will build. It's like a forced saving. Okay. Part of it, insurance, and a forced saving. So here, so multiply this by 12. The required premium every year is $2,979. This is called the target premium, as you could see here, right?
Yep.
Now look at this. There is a minimum premium, $1,940. If you divide it by 12, it's only just about 100 and something. Okay. So
Okay.
when is minimum premium applicable? So let's say he just started, and 3 months, 5 months after, he lost a job, and or so there is an emergency, and he said, you know what, I wish I could just make it go down below this one for now. Well, yes, he could temporarily go down to the minimum, right? 1,940 divided by 12 is how much that is. Okay, he could go down to that temporarily. Okay.
Okay.
And then later on, when he's okay already, he could catch up. He could go back to 248. He could even overfund, put more money and grow more money so that he could utilize the index strategy to grow money inside this plan, so that
Okay.
age 65, when he decides and all is well, he could turn the life insurance plan into a tax-free lifetime income. Okay. So let me tell you this here, guideline level premium. So this is how much the IRS allowed this specific person, a 40-year-old, at 300,000 coverage, okay, allowed him to actually put every year instead of him putting just this, okay?
Okay.
So which means that, you've heard of whole life, right? Whole life insurance.
Yes.
A whole life, Kari, is a permanent life, but the premium is fixed. And the person has to pay every month, month after month, because if he decides to stop, he will lose his whole life insurance plan. Okay? So here, the whole life doesn't allow that person to put more money if he decides to grow more money inside the whole life plan. Okay? It's not flexible. Index Universal Life allows you to do that. That's why they allow, in this case, it allows this lady right here to put in 8,198 every year if she can afford to. Okay, is it clear?
Yes.
Clear. Okay, now let me show you the benefits, Kari. Okay, the benefits.
Okay.
Let me show you the benefits. And by the way, before I go to that, there's two values right here. There's accumulated value and there's surrender value. Accumulated value is the policy value. This is based on the illustrated rate by National Life Group under IUL. They're only using a very conservative 5.8, 5.99% average. Okay, very conservative. 20-year look back utilizing the index strategy, Kari, it averaged between 7 to 8.5% according to Transamerica. So basically, 5.8 is very conservative, but that's not guaranteed. Again, what's the guarantee? Every time the market goes up, you go up to the cap. But every time the market crashed, you just go zero. Zero is a hero. That's the guarantee. Okay? Okay. That's the guarantee. Now look at this. I'll show you the benefits. Okay, in the event the person gets sick, I'll run that report. Okay, I'll show you in this case right here. And he's only putting in the target premium, the premium that's required.
Okay.
So here, it's a female, 40-year-old, and look at this. So her planned insurance will provide her, what? She starts her policy at 248.25 monthly. If that happens to her the following day, when it's approved and issued, 300,148. Of course, this is life insurance.
Right.
Dying too soon, it gives you that. If she needs cash at age 69, she could have access to 149,000. This is based on the average of 5.8, 5.9% cash value. Okay. Yes. So that's what it is. The more she puts money, if she can afford to, the more money she will have. Of course, right? Now look at this. What if she becomes sick at age 65? Look at this. Terminal illness is this. Look at critical illness and critical injury. This is based on a life-threatening event. You know, stage 4 cancer like that, stroke. You know this one right here, 337,000, right? That's how great that is. And when we look at, different ages and severity of sickness, I'll show you that table. Okay. Now remember again, this is an estimate, right? This is an estimate based on those numbers. But look at this. That 40-year-old, right? At age 50, he gets sick. Age 50 with category 3 cancer. Right. 171 lump sum, right? What about category 4 life-threatening? 262. It's more, 262, right? And look at this, different ages right here, right? That's how great that is. That's what we have. And let me go back here, because Kari, what's great about this plan is that, most people, they don't want to pay forever, right? A lot of people will say, hey, Harney, Kari, I want this plan, but can I just pay until I get to 65, and when I retire, I'll stop paying, and I still have my life insurance for as long as I live? Or maybe, can I just pay for this in the next 15 years, and after that, I will stop, but I want to make sure that I have my life insurance for as long as I live, right? You can do that here. This is very flexible, Kari. Let me tell you, Kari, most people, when we buy a house, we get a loan, right? 30-year loan. Right? Right. But the 30-year loan, for example, the mortgage is 1,500, but then the wife said, hey, honey, you know what, 30 years is too long. Let's make this one shorter. How can we do that, Kari?
To make it shorter?
To make the loan shorter, to pay off it earlier. How can we do that? Put more money to it, or refinance to shorter term, right? Refinance to 15 years, but then doing a refinance. That's right. You got it, right?
I see. Yep.
Yeah, doing a refinance from 1,500 monthly. Now maybe it will be 2,000 or 2,100.
Okay.
But if they can afford to do that in 15-year time, after 15 years, the loan is done. and they own the house for as long as they want it. They own it forever, right?
I see. Okay.
See?
Yeah.
Yes. Here, Kari, okay? Here, if this lady will say to me, hey, Harney, I just want to pay this, pay this life insurance in the next 15 years. After that, I'll stop, but I want to make sure that I have my policy so that anytime I get sick, I have a policy that will take care of me. Yes, you can do that. And the secret, again, the right thing to do is overfund, just like what you're doing in your mortgage. Put more money now, because whatever money you have at the time you stop will determine the life of your policy. Is that clear, Kari?
It is.
Yes, and here you can do that. I'll just show you. Okay, let's say, for example, he said, okay, Harney, I just want to pay for the next 15 years. Okay, now instead of her putting in 240 something now, I could, let's say, specify this amount, and maybe if she can afford 400, okay, but only for 15 years. Okay, let's take a look at what will happen only for 15 years. Let's see. Will this plan, after 15 years, and she stopped, will this plan be there for her anytime she gets sick and for as long as she lives? Definitely, right?
Okay.
Definitely. Look at this. This is age 102, right? She stopped at when she was age 54 years old. Okay? But look at the money. It continuously grow, right?
I got it. Yeah.
Look at the death benefit. It continuously grow because whatever policy value you have will be added to the 300,000, and that's the total. Yeah. So what happens also, Kari, all those living benefits coverages increases because it will be based on this right here.
Okay.
Everything's good, right? Great.
Right.
We have a great plan. Now here, let's say this person, Kari, said, hey, Harney, instead of me putting all my money in the 401k, I'll put 700, let me see. I could put the maximum. Remember, that's $8,000 that she can put in here every year, right? So let's say she decides, Harney, I can put that maximum guidelines, not guideline single, but guideline level premium, okay? I can put that guideline level premium until I retire, and I want to retire at age 60 only, okay? Age 60. Let's take a look. Are you still there, Kari?
I'm listening. I'm here.
Okay, good. So here, guideline level premium, okay? I'll click this one, quick view, until age 60. So look at what happened here. So she decided to put in 683. This is the maximum that she could every month, okay?
Right.
683. So she overfunded it so that she could grow money right here, okay, for her future, okay? At age 60, right here, she has 284,000. And she said, you know what? She realized, I still want to work, right? I have a good job. I still want to work. I'll just stop putting in money. I'll wait until I get to 66. Then I'll start taking out money from my plan. Look at how much money she will have 5 years after. 426,000. Right?
I see it. Right.
Now, and when she decides, let's take a look at income. When she decides, okay, instead of me getting that income starting age 60, which will be smaller, okay, let me take that income starting age 66, okay? When she retires, age 66 to eternity, to forever. Look at that. She will be, this is the available income for her based on these numbers, based on the average 5.8, 26,000 every year for as long as she lives tax-free. How great is that, Karen?
That's awesome. Okay, see.
That's awesome. And look at this, right? She stopped putting in money already right here. Look at that. She has paid 8,198 for 21 years. But you know that she can easily live now in the next 25 to 30 years with 26,000 tax-free income.
All right.
That's how awesome. That's what we have, Kari. That's what. Okay, that's what we have. And all the more of the details of this one, when you join with us and you get your license, you decide, get your license first, and then we do I could give you a chance to you join, you get your license, And then when you're there licensed and appointed, and that's when I'll give you the fast track so that you could get to the higher contract, but at the same time you could already make money. At least half of the commissionable amount will be commissionable to you. So at least we'll be able to help you, right? To start making money while you're on training. Is that good?
Okay. Yeah, I got it.
We have the great plan and we have the great business platform, Kari. So I would really be glad if you join my team, and I'll be the person to actually train you directly on all these things. Yeah.
Okay.
Yeah. So let me tell you, with our company, we have a one-time $125 to be part of Premier Financial Alliance, and what we get with that one is you get a website. Okay, this website, Kari, look, I'll show you this. Okay.
Mm-hmm.
This website, this is actually your back office support. So this is all the monitoring of your business, your people's business, whatever those policies that are in process, that are paid, all those things. All the people that you brought in, you'll see them, their contracts, and the 12-month commission, you'll see.
Right.
Yeah, everything that's in here, on also materials, how to get appointed.
Right. I see.
By the way, let me tell you this, okay? E&O insurance, okay? Just like any other insurance companies, just like the brokerage, real estate, you're familiar with professional insurance with the doctors, right?
You mean like their insurance that covers them for their malpractice?
Yes, that's exactly right. Yeah.
Got it.
In this industry, we also have that. We call it the errors.
Oh, good. I have lots of friends that are doctors.
Yeah, we call it the errors and omissions insurance. Now here, it doesn't matter what our contract is, even if we just started, or maybe we're at 83% already. The E&O that we have is at $650 every year. So that is the only investment we have. It doesn't matter.
What does E&O stand for?
Errors and omissions insurance.
Errors and
omissions. Omissions.
Commissions, like with a C?
No, like you omit, right?
Oh, omissions. Okay,
yeah,
got
omissions.
It. Error and omissions. Okay, I got it.
Errors and omissions insurance that protects us from any future, whatever that is, just like the doctor. Okay, because we're handling contracts. Yeah. So, and that's what we do. Now, for that though, that is the period for the whole year starts in every July 1st to the June 30th of the following year, and it's prorated. So depending on when you join, when you get your license, and that's how you get paid per quarter proration. Okay.
Okay.
All right. So Kari, I know you're about to drive right there.
I am, but I'm listening.
Yeah. So you're about to drive, but we would love for you to join, and you sign up. And this is the 125 gets you this, and you have access to the trainings of the millionaires, the multi-six-figure income we have. So you have everything that there is. All you have to do is just jump in and just try it. Give it a try.
Okay.
Okay.
All right.
Okay. So when are you going to sign up?
So I have to talk to my boyfriend because he'd be the one that's would pay for it for right now.
Okay.
So let me talk to him today.
Anytime you're ready, give me a call or call Lorena.
Okay.
Okay. And so we can guide you through that, and we'll guide you through the licensing process.
All right. Cool. Okay.
Yeah. By the way, before I end this,
yes,
125, you'll get this website, but with that, the reviewer actually costs $200 at Excel Solutions, but with a discount code, because you will join with us, our company's discount code will give you that. It will become $19.95 only. Okay.
Okay. To do the testing part, I printed everything from my old.
Everything? Okay.
I did.
Good. Yeah, you can use
but
that.
I mean, I don't. I mean, honestly, I didn't even read it. I let Clint do that part for me because I find that kind of stuff just tedious.
Okay.
I have a photographic memory, so I memorize things.
Very good.
Within I can do it within a 24-hour span, basically.
Very good, Kari.
And so I have all of my material that I have to study, to memorize, but I still think that those things are good for a, just to go through the process. I told Lorena, like, I don't mind, going through it and doing it again. Because again, mine was for life insurance, and I'm sure there's tons of things I really don't know all about in the health insurance world. Just because I worked in the medical field, I know a lot of the back ends as far as admin and, patients and their benefits and how to check them. And, I know claims and how they get paid and all of that stuff. There's different departments and different reasons why things get, rejected, denied, they stall, whatever.
Don't worry about health insurance. Okay. Just focus on the life only.
Okay.
Yeah. If you're that, if you have that, if you're confident even now to take the exam, schedule it as soon as you could. So you could get a license and get appointed right away with National Life so we can start.
Okay. And I mean, I'm not that confident yet. I'm like, I'd have to study still again. I would want to go back and refresh my brain for sure.
Okay. I'll have Lorena give you my number.
Okay.
And you could please text me. And if you have questions so I can guide you through, please do that. Okay. Yeah.
All right. Thank you, Harney. All right,
and
Lorena.
Thank you very much, Kari.
Thank
you for your time.
All right.
Thank you.
Okay. Bye.
Thank you. Bye.
You're welcome.
You
Bye.
take care. Bye.
All right. Bye.